Good morning. My name is Carla Jones-Weber. I'm the Chief Financial and Administrative Officer here at the Community Foundation. I have with me Elizabeth Monticelli, who is one of our consultants from Mercer. We had an investment committee meeting this morning. We meet quarterly, and Mercer comes to our table with us to have these discussions. I would say we had a very full table and a very robust conversation. It was really interesting to think about how things have changed in the last 6 months and year, and just have some interaction with the committee members to discuss all of those important topics. So as we think about what we did today, this is the time of year where we do an annual evaluation of our investment policy statement. And so we go through it pretty much in detail to make sure there's nothing that we need to amend or change in that process. This is also the time that we look at our asset allocation really a little bit more in depth. We're doing it on a continual basis throughout the year, but really your team looks at it, runs the models that you have, thinks about the current economic situation, and provides us a recommendation if there's something that you feel like we need to change.
Right, and so we did that and looked at the asset classes, and there have been a lot of changes this last year, especially with the rise in interest rates, and the equity valuations had improved, but both bonds and equities are more compelling. So overall, we weren't recommending any asset allocation changes at this morning's meeting with the investment committee, but we did review our expected return forecasts, which were really nice to see that they have improved and are much higher going forward.
And so in addition to evaluating those asset allocations, you guys do a thorough review of the investment managers in each of those asset classes.
Right, so we reviewed all the, and at the last meeting we had been watching one manager that had unfortunately not been as defensive as we had hoped and had been in the past. So we did a full evaluation and deep dive on that manager and that asset class as well with the committee, and we opted to change and move to a different manager that provided more diversification and more upside capture than the current manager. So there was a small change.
Okay. And based on the rest of the discussion, it didn't seem as though there was anything else that was of need of change right now.
No, but I will say that we're all watching for opportunities. The committee's very well aware of the changing market. If we do enter into a shallow recession, we hope next year, or no recession at all, there could be some opportunities, especially maybe in fixed income, and definitely looking at some of the asset classes, and are they doing are they providing that downside risk that we hoped for, and if not, is it better to allocate those assets elsewhere? So that's what we'll be looking at next year.
And so when we think about those asset allocations and any changes we might make, though, we're always considering the fact that this portfolio is long-term portfolio.
Right.
And
so we look at long-term forecasts and long-term changes. We're not market timing and moving to cash one day and moving out of an asset class. No, these are tiny steps. We look at a strategic long-term asset allocation. Look at all the return and risk characteristics that we can to make sure that that's going to meet that goal that we want for the long-term portfolio, the index portfolio, and the moderate growth.
Is there anything that you see as an area that we should be focusing on in the next 12 months as we consider what might change?
Yeah, definitely it'll be fixed income. I think that equities are more compelling because they've fallen so much. Their evaluations are more attractive, but we think that if we do have inflation next year, we do have a mild recession, that there's a little bit more pressure on those equities. Mm-hmm. So we prefer, and the committee was talking about it today, about taking a little bit more risk, maybe in the high yield or fixed income area. Especially because the yields are much higher. I know we've got that high inflation to deal with, but we do hope, looking at market expectations, that it'll be lower next year. So next year we'll be looking in fixed income. We will look in equities as well, and then work with the committee to make that decision.
So while we were talking about equities, I know there's a lot of conversation about private equities versus the public equities, and I know our committee has been committed to having, for the long-term growth portfolio, a private equity allocation. Can you give us an idea of how you're feeling about how private equities might perform moving forward compared to public?
That's a long-term investment. Mm-hmm. It's illiquid and it's done great. It's definitely attributed value to your portfolio above a naive mix of like a 60-40 stock bond. So, but it's a private illiquid investment. That's a 10 or 14 year forward-looking return before you exit from it. It's a small allocation. You've got about 7% of the long-term portfolio, but our expectations on that portfolio are higher than public equities. Mm-hmm. And that's that illiquid risk premium that we should get. It's several percentage points, but it's enough to move the needle.
Yeah.
And with a 7% allocation, very comfortable with that at the foundation level. And I think the committee would reaffirm that allocation to private equity today.
So this just kind of gives you an example of some of the conversations that we're having around the investment committee table. We're very thankful for Mercer and the depth of research and resources that they bring to our table for
Yeah, but
us.
you have an excellent committee.
We do have an excellent committee. They work hard to help us be good stewards of the assets that we're entrusted with. So if you ever have any questions about investments, please feel free to give us a call at the Community Foundation. We're here to help answer any questions that we can. And if we're not able to, we know we have our friends at Mercer that will help provide additional resources. So thank you.
Thanks.